What's up, everyone? It's Karthik with MoneyVest. So markets here down slightly, about 0.5% on the day after Jerome Powell's speech, as well as Tesla, Meta, and Microsoft earnings. Tesla did pop after hours. It was up a little bit over 4%, and we had Meta up over 2%. Microsoft not so much on weaker guidance. And Jerome Powell, of course, talking a lot about policy, quantitative easing, interest rate expectations, and of course, talking about inflation remaining elevated. We covered all of that during our live stream as well. So this right here was a state of the market. NASDAQ just over 19,600. We had the S&P 500 a little bit over 6,000 and the Dow Jones over 44,700. All three indices were down on the day, and they were also very, very volatile during the day. At one point, we were down over 1% for the NASDAQ, close to 1% for the S&P. We came up to being break even and then sold off once again. So a lot of indecision in this market, and we kind of identified some of that rotation last week as the markets were rotating out of technology over to other parts of the market, and that really accelerated earlier this week on Monday and Tuesday with DeepSeek's news. And of course, it is continuing to be a very red week for the market. So if you come over to the weekly time frame for SPX, you'll notice that on the week the markets are down about 1% so far, but we are still getting a green candle, meaning there's been buyers that have been stepping up from Monday and Tuesday after the significant gap down. But if we were trading down to Monday's lows, we would be down a little bit over 2.2% from those levels. But luckily, we're only down about 1%. So lots for us to break down in this update. We did have, of course, the earnings calls for a lot of these big tech companies, which I'll break down in another video. But for SoFi, I ended up closing my calls for 97% profit, and we'll be selling new ones on the next big green day. So once we get a green day and the call premiums jump, I will be selling new calls for SoFi, and we'll be closing out my NVDA calls, the 140 calls that expire on Valentine's Day. We'll be closing those out as well. They're up close to 90%, so I'm just waiting for them to be up 94, 95%, and then we'll be selling new calls on NVIDIA as well. NVIDIA, of course, has been at the center of this major sell-off this entire past week. So if you want to get access to all the trade alerts, find out exactly what we're buying, selling, and trading on a regular basis, not just me, but a lot of other experienced traders and investors, link's going to be down below. This gives you access to the MoneyVest website, as well as all the members-only videos, portfolio updates, and the Discord access. There's an additional 20% discount that does expire in 2 days, literally February 1st, and then I won't be able to create a new Discord discount for a while. So if you want to take advantage, link's going to be down below. And this is also suitable for existing members if you want to upgrade for the year. So all you have to do is come over to this, and there's going to be a discount code, and all you have to do is just plug in JAN. That's the January discount code, JAN. So if you apply this, and the discount is going to automatically be applied over here. So you should see the discount code option, so you can apply that for the MoneyVest community. So again, link's going to be down below if you want to join. Feel free. If you have any questions, please reach out. I'm more than happy to also schedule simple 5-minute free conversations, free calls, Zoom calls with all of you if you have any questions whatsoever. Literally, I am here to help, genuinely trying to provide as much value as I can. So MoneyVest Index trading down to 3.47, so very, very neutral reading right now for the MoneyVest Index. So this essentially is not a clear signal for us to be deploying capital as of yet, but it is still coming down from those optimistic levels, right? So we were at optimistic levels up until Friday and even Monday at 3.56, 3.51, and then of course now we're back under 3.5. And so the lower we get down to uncertainty, fear, and panic, the better those buying opportunities will be for us, while also combining that with volatility, which at one point, of course, was at over 22.5 as of Monday, sold off back down to 16.4 as the markets have recovered intra-week, I should say. We've seen buyers step in over the last 3 to 4 days as the markets have pushed up from those lows from back in Monday. And of course, the volatility has also come down back down to 16.5. Now, this right here was the entire sell-off for the day. We did have over a $246 billion sell-off for the market, with Big 3 over $148 billion, Magnificent 7 $187 billion, and Top 10 just under $200 billion. But let me quickly break down exactly how much these stocks were pushing higher in after hours. So Tesla back up to over $405, NVIDIA down to $123, so still lower here on the day and even after hours. Palantir is just a little bit shy of $80, and then we had SoFi here just trading under $16 per share, even during after hours at around 8 p.m. Eastern. If you come over to Meta platforms, and Meta was pushing up to as much as $713. That's how high it got up to after Zuckerberg said that they're not going to be reducing their spend on artificial intelligence. And the company, to be honest, reported some blockbuster numbers, 21% growth in revenue, beating expectations on EPS and revenue, but it was up over 2% after hours, getting up to $692. And then Microsoft, on a weaker guidance, absolutely got sold off here down to $421 per share for Microsoft. So this right here was the closing price, and it was down a little bit over 4.6, almost 5% after hours for Microsoft. So coming over to the semiconductors, ASML reported some very strong numbers, and it was up over 4%. It was actually up more than 4%, but then it sold off intraday, and I think we had a red candle on a green day, but nonetheless, very strong numbers and very strong performance from ASML. It's been a stock that's been very attractive from a risk-reward standpoint. It is a little bit more of an expensive stock, which is why I had a couple shares of ASML at 690s, sold it for a nice little profit, and then wasn't able to get up to 100 shares of ASML to start selling calls. But I do know that premiums are going to be very juicy for ASML given the price of that stock. Advanced Micro Devices 117, so up a little bit over 2.7% on the day. We had Applied Materials 1.4%, and then everything else was either flat or down significantly, but NVDA continues to struggle, down over 4% here. Tesla was down over 2.2%, but then of course back over $400 after hours. Microsoft down to 421. Both the indices were lower. Amazon down about almost 0.5%. The bond market slightly down. And then we did have Google, Meta, Apple, and Netflix continue to push higher, especially Apple. It's now back up to almost $240. This is a stock that we've been talking about on the channel time and time again, more recently, considering how much opportunity there was. Real estate, technology, healthcare, industrials, discretionary, materials, financials, all these ETFs selling off. So markets really rotating money into staples and comm services once again, as well as energy, as crude oil prices are a little bit more stable, but coming back down to that support of $72, $73 a barrel and trading literally inside of this area of demand right now. So very strong support there for crude oil. So Fed holds rates steady, takes less confident view on inflation. So the unemployment rate has stabilized at a low level in recent months. The labor market conditions remain solid, and the new language read that inflation remains somewhat elevated. So we've been talking about this on the channel before, that inflation is indeed elevated. It is not coming down to the Fed's target fast enough, and it's been very stubborn. So stronger labor market and a stubborn inflation would provide less incentive for the Fed to ease policy. And the statement again indicated that the economy has continued to expand at a solid pace. And that's exactly what we've talked about. Like, we've been talking about this on the channel for time and time again, that the Federal Reserve needs an incentive. They need something to fix interest rates. Think of interest rates as a fix to a problem, right? You would only change interest rates if there was something to fix as part of their dual mandate. And if inflation is more elevated, slightly elevated against their policy rate, the target rate at 2%, and the labor market is extremely strong, they have no reason to do anything. On the contrary belief, I would argue that they might still have a reason to raise rates because economy is very strong, it's growing at a rapid rate, and you've got a very strong labor market, but inflation needs to be killed down under 2% before we see an episode of 1970s again and start to see that inflation reaccelerate back up to levels where we don't want it. So of course, there's different opinions, there's different perspectives with that. We also learned, Jerome Powell's take on the political pressures around interest rates in monetary policy, and time again, he said that we operate independently. We don't want to be swayed by any political party or influenced by any political person, and so for that reason we are here to serve the public, and that was pretty much expected. That's what we were expecting he was going to say. And during a news conference, Chairman Jerome Powell added that the labor market has not been a significant source of inflationary pressures. He said the central bank would need to see real progress on inflation or some weakness in the labor market before consider making adjustments, and that's how it should be. The interest rate should only be changed if they actually see that labor market is getting worse or inflation is not showing any progress. And so until then, I think it's really important for us to take it slow. And so I think a pause, I agree with the pause here, although I don't agree with the first 50 basis point cut. but I do agree with the fact that a pause was necessary in this meeting to really evaluate where we're headed. Now, Zuckerberg says Meta won't slow down AI spend despite DeepSeek's breakthrough in artificial intelligence. So Zuckerberg poured cold water on the notion that Meta's overall AI spending will soon drop now that DeepSeek has allegedly proven that cutting-edge AI requires far less money and computing resources than previously thought. He says, and I quote, "It's probably too early to really have a strong opinion on what this means for the trajectory around infrastructure and CapEx. There are a bunch of trends that are happening here all at once." And that is true. That's how fast technology is moving right now. And they reported very strong numbers, 21% increase in sales to over $48.3 billion, beating expectations. And they're expecting $60 to $65 billion in artificial intelligence investments and total expenses between $114 and $119 billion. Now, Tesla, on the contrary, missed expectations on both accounts on revenue and EPS. They reported 73 cents per share versus 76 cents, and revenue 25.7 billion versus 27.2 billion. So that was a pretty decent drop for revenue for the company, and that was a 2% drop on a year-over-year basis. Actually, 2% increase on a year-over-year basis, but a drop from the analyst expectations. And automotive revenues actually did fell 8% to 19.8, so a little bit shy of $20 billion in the same quarter last year, and of that, 692 million came from regulatory credits. Operating income also did decline 23% year over year to 1.6 billion. So I will break down and do a more deeper dive into these companies in another video. So again, this is mostly for market updates. So we'll briefly talk about them and jump right into the S&P and the NASDAQ. So coming back over to the market breadth first, we are starting to see market breadth roll over. Once again, we got up to as much as over 85%. And now we're seeing, the percentage of stocks trading above their 20-day moving average trade back down to 70%. And this right here, the 50 SMA is now just a little bit over 51%, and the 200 SMA is sitting at just over 58%. So market breadth is certainly starting to weaken a little bit as the market overall is weakening this past week. However, there is money still flowing into other parts of the market, more safer parts of the market, and of course, after hours, Meta and Tesla being one of the clear winners after these earnings, after the first initial Magnificent Seven companies reporting their numbers. So coming over to S&P 500 first, and this right here is going to be SPX, still validating that support perfectly. So you'll notice that we came down to 6,000. Buyers indeed stepped in, and we're back up to over 6,039. So that right there is going to be an important level for us to watch, and resistance all the way up to as much as 6,100 for S&P 500. So very important level here, resistance right there. If we do end up breaking down further, next target's going to be all the way down at 58.40. Tom Lee's also mentioned that if the markets can hold up above 58.81, then we are on a track to hitting double-digit returns for the entire year of 2025. So we'll see if that actually happens or not. Coming over to the NASDAQ, and NASDAQ also consolidating sideways, still within the context of this downtrend, even though we briefly broke out of this lower high and lower low pattern. But the gap down on Monday really sending the NASDAQ down to 19,200. Of course, recovering a little bit, buyers stepping back in, and we do have some gaps to fill in on the upside further. So support level is going to stay put at 19,300, resistance all the way up to 20,000. That's the area of supply for the NASDAQ as well. Coming over to Apple, and Apple here continues to break to the upside, so very good to see that. And we're coming up to that resistance at around 240. So that's something to keep in mind. We have gotten rejected here at these levels in the past. And so be mindful of where we are with Apple. The trade idea, if you were trading Apple from our previous videos, I would ideally be taking profits in and around these levels, considering we've seen a very nice 10 to 12% rally from that 220 level, just under 10%, a little bit over 9%. And so this is a very nice place where we're now starting to get overbought. Prices moved up quite a bit, and profit taking can be on the horizon for traders for this stock. Coming over to Amazon, and Amazon here consolidating sideways, and support level is going to stay put at $233 all the way down to $229, and resistance up to as much as $241. We've got a $250 target on Amazon that is going to put us at the $5,000 level on a pre-split adjusted basis. So we've got 5K Fridays now for Amazon. Tesla back above $400. So if you come over to this chart, we are at $405. And so we're somewhere around here, and resistance is going to stay put right there at $430. So nothing technically changes for Tesla. We're still at $430 resistance there. Huge area of supply where we have gotten rejected time and time again. and so we're not able to break out above this level, and support level is going to stay put at $374, $375 for Tesla. Coming over to Broadcom, I do miss this stock in the last couple updates, so I want to break this down earlier. So this right here is going to be that resistance for Broadcom after the huge gap down, and support level is going to stay put at 185. So you'll notice that we have a couple gaps for Broadcom to fill in, one on the upside, one on the downside, and right now after the huge post-earnings gap up, we're seeing the Monday sell-off right here, and it's consolidating within a range. So 211 is going to be that resistance, 185 is going to be that support, so previous resistance turning into a support, and right now we've got a couple gaps to fill on either direction. So just watch those two levels and how it's consolidating in between those levels. And of course, if it does break out further, resistance is going to be 249, 250 for Broadcom as well. NVIDIA continues to be incredibly volatile. I mean, it's trading like a penny stock. Hundreds of billions of dollars are being lost and made in NVIDIA every single day. Resistance is going to stay but roughly at 127. Support level inside this green rectangle in the 116s and 118s. And if you do end up breaking out above this level, next target is going to be 132, 136 for NVIDIA moving forward. Talking about advanced micro devices, and AMD is starting to see some relief and pushing up over 2.7%. Still has got a long way to go. Advanced micro devices still has a long way to go. Still in the lower high and lower low pattern here. And resistance is going to stay put all the way up to 131, 132 for advanced micro devices. And support level inside this green rectangle at 113 for AMD as well. Coming over to Meta platforms now, and Meta here pushing higher to new all-time highs, breaking out to 690s. So it got up to as much as 696, I think, or 692. High for after hours was 714. So breaking out to right around here, it's going to gap up with a little bit of a gap left after the gap up, and support level is going to stay right here at 660s down to as low as 640s for Meta. It's starting to become a bit more overbought, so I would just be a little bit more careful with Meta, considering how overstretched and overextended the price action is right now for Meta platforms. Coming over to Netflix, a lot of consolidation sideways. We've got a gap on the downside. In fact, I think it's been readjusted, or if you come over to the daily chart, yeah, see, this is what's weird. On the 4-hour chart, there is literally no candle. There's nothing. There's no trades here. But on the daily chart, it actually shows me a very long wick to the upside. So you know what? I'm going to put this all the way down here, which is going to be the entire gap that Netflix will eventually or would need to eventually fill in. But resistance is going to stay put at $1,000. Support all the way down to $809, $810 for Netflix. Coming over to Google. And Google here also consolidating sideways, 197. Resistance is going to stay put at $202. All the way down to 183 is going to be that support for Google. And Microsoft back down in the 420s. So we are in the 421s. So we are going to be most likely opening up right around here somewhere. So we're back below this support level, which will go ahead and turn this level into a resistance once again. So it's been very, very back and forth over the last few weeks, and this right here is going to be that resistance once again for Microsoft. So, and then finally coming over to PayPal and Visa, and of course Enphase and Costco. So PayPal here consolidating sideways, resistance over here at $90, not able to break out above this level, and Visa on the other hand continues to push higher, very consistent green days after green days, and we've got resistance sitting right over there inside this higher high and higher low pattern. So inside this uptrend, with support levels staying put at $321 per share. And finally, coming over to Enphase, continues to be very weak, breaking down on the 4-hour chart. Let's see how low it got down to $61, and support level is going to stay put at $58 to $59 for Enphase. And then finally, you come over to Costco, which is pushing up and breaking out above this resistance of $961. Next target at $1,000, support level at $905. So hope you all enjoyed this video and a complete update on the markets. The takeaway or the summary or the conclusion from this video really is to sit tight and be patient. Let the prices come to you. That's what we like to do. You can continue the dollar cost average into some of the more passive ETFs and index funds. But when it comes to individual stocks, just be a little bit more mindful that almost a lot of them are trading near all-time highs, and we are getting a bit more overstretched and overbought here for a few different companies. And so if you are interested, just calculate your fair values, understand those technical levels. You can also start trading options by selling puts and waiting for the prices to come down to those levels before you acquire them. So patience is needed in the markets to become successful at investing and trading over the long term. Very, very important. So make sure that you drop a like and subscribe to the channel. Again, if you want that additional 20% discount, just $19 a month, you get access to everything, including all the trade alerts, portfolio updates, as well as the Discord and MoneyVest website. Link's going to be down below, and even existing members can actually check out using this coupon code, which is going to be JAN, so Jan, and that will give you 20% off the first year and pretty much bring it down to just about $19 a month, $19.50 a month to be precise. So as always, happy investing. I'll see you all in the next video.